Hi everyone, this is Alejandro Cremades, and today we're going to be talking about what is a safe note. So essentially a safe note is a way to raise money. It's a very founder-friendly way of really raising that cash at the early stages of a seed, maybe like Series A, or in between if you're doing a bridge round. So with that being said, let's get into it. So the history of the safe notes, really, I mean, they came into place as a result of Y-Combinator back in 2013 or so, when they realized that convertible notes didn't really give the founders a lot of flexibility when raising money. So as a result of that, really the safes came into place. Essentially, safe notes, to really understand the concept, what it is not a form of debt like you would see on convertible notes, but really a promise of converting that money that the investor is giving you in something of value, perhaps equity down the line. In terms of the benefits of the safe notes, one of the critical ones is that you don't really need a lawyer to really do this. I mean, we're talking about 5 pages. You can literally get the template of the safe note and really get it done yourself. I think that the ease of really getting, like a structure of this nature is one of the main attractiveness of safe notes. Essentially, you need to know that this is something essentially new. I mean, not so new, for example, if you're in the Bay Area, in San Francisco, Silicon Valley, or so forth, or in other major startup hubs, like, for example, New York. But if you were to go overseas, perhaps this adds a layer of complexity where the investor is not so familiar with how a safe note works, and you may scare people off. So you want to make sure that if you are using this form of structure to raise money, you're going to be putting it in front of investors that are going to be okay with it, that are familiar with it, and where you're not essentially using or adding this as a way to add friction in order to get that money that you're seeking. So in terms of when you're using a safe note, so you're going to be using this on the seed round where you're raising your first tranche of money. You're going to be using this as well on a bridge round where essentially you've maybe not hit enough of your milestones to really raise an equity round, and you need a little bit more oxygen to really extend your runway so that you can continue executing and really unlocking certain milestones. Or you can perhaps use this, maybe there's an additional A that you do, or maybe between the seed and the A kind of thing, where it's not necessarily a bridge round per se, but a way to really get that money in. Now, the 2 most important things about safe notes, when it comes to the structure and the terms, is either there is a cap, meaning that you're establishing already a valuation where they're not going to go over when that conversion happens, or perhaps the discount that you're providing on the valuation. So for example, if you do a round, next, let's say the Series A round, it ends up being, let's say, 20 million, and you're giving, let's say, I don't know, to throw in a number, 10% of a discount, then essentially they're not coming in at 20 million as everyone else is coming. Maybe they're coming in, at that point at 18 million pre-money, right? So the pre-money is before the money kicks in, and the post-money is when the investment, that injection of capital has also been put into the business. The main difference, again, between the convertible note and the safe note is that the safe note basically is not a form of debt. And then the convertible note is essentially a form of debt in which that is going to be converted into equity in the next round of financing. So with that being said, I hope that you liked this video, and if you did, please make sure to hit the like button, to also leave a comment below, and to subscribe so that you don't miss out on any videos that we're going to be launching every week. And then also check out the fundraising training, which is that training where we help founders every step of the way, from A all the way to C when it comes to fundraising. We have live Q&As, templates, agreements, a community of founders all over the world, you name it. So thank you so much for watching. Bye-bye.